Hello students, so welcome back to another video for UPSC Prelims 2024 solution analysis. And so far IQCivils IS Academy has already provided solutions for geography, science and tech, environment, passages in GS paper 2 as well as history, government schemes and polity. And in this video we'll be talking about Indian economy and some miscellaneous topics including some international topics questions as well. Okay, so let us begin without wasting any further time. So question number 17 on your screen. Consider the following pairs: Argentina, worst economic crisis; Sudan, war between countries' regular army and paramilitary forces; and Turkey rescinded its membership of NATO. So, how many of the pairs given above are correctly matched? So first of all, Argentina, yes, this is correct. So Argentina has been going through a very bad economic crisis, and this economic crisis is primarily a result of chronic inflation and persistent fiscal deficits. And these issues have escalated particularly in 2023, and the inflation rate in 2023 and in 24 has been between 190% to about 212%. And in the last 65 years, since 1944, uh, Argentinian government has not been able to return sovereign debt, 9 times, and it has defaulted on sovereign debt as well. And this economic crisis is worse for Argentina. And of late, the combination of industrial protectionism, redistribution of income from agricultural sector to industrial sector, and growing government intervention in the economy has sparked the inflationary process as well. And currently, as of just January 2024, the inflation rate recorded in Argentina was 211%, which is even higher than Venezuela. And Venezuela was at 193%. And we have discussed in the last video as well. So Venezuela is also undergoing a tough time in South America. So another superpower in South America, which is undergoing a very bad economic crisis right now. And the migrations of the people has begun, and in the last 34 years, it is the highest inflation rate recorded in Argentina, and the last hyperinflation recorded in Argentina was in 1989-1990, which still is engraved in the memory of the people in Argentina. So such a loving football nation, but right now they are going through a very bad economic crisis. So second is Sudan. Sudan, war between the country's regular army and paramilitary forces. So this is also correct. So in Sudan, the war broke out between the Sudanese armed forces and paramilitary force. So the Sudanese armed forces clashed with Rapid Support Forces, which is a paramilitary organization in Sudan. So the paramilitary forces is under the leadership of Hemeti, and the Sudanese armed forces is under the leadership of the dictatorial general of Sudan, Abdel Fattah al-Burhan. Adel Fattah al-Burhan, and he has been Sudanese leader. He was the army general also, and he has been a leader in Sudan since 2019. And since 2023, this crisis and war between Sudanese army and paramilitary forces has led to Sudanese refugee crisis, and this is another big migration crisis in the world, and it is the largest migration crisis in Africa so far. So nearly 2.1 million people have left the country. Sudanese people have left the country, and nearly 12 million people have been internally displaced within Sudan. And about 75,000 people are migrant returnees from Sudan. So largest refugee crisis in African history, and certainly in a war-torn country which was earlier affected by food crisis as well. So this crisis has left the country in extreme trouble, and because of this, the combined African governments, they are trying to resolve the issues between the army and the paramilitary forces. But so far, it has been a very very bad situation, right? So Turkey, number three, rescinded its membership of NATO. No, it is wrong. Turkey did not leave the membership of NATO. Rather, Turkey has been a member of NATO since 1952, and it has one of the largest armies in NATO. And just for your knowledge, NATO was established in 1949 with members from North America and Europe. And the primary purpose of NATO is to protect its allies from external and internal disturbances, right? So the answer to this question is option B, B for Bombay. Only two pairs, Argentina and Sudan, are correctly matched. The Turkey one is wrong. Moving to another question on your screen. Question number 40. So question number 40 is based on, yeah. So it's a topic from Army, Air Force, and Navy. So which of the following are correctly matched in terms of equivalent rank in three services of Indian Defense Forces? So basically, tough question, little bit, because it is not easy to remember Army, Air Force, and Navy equivalent ranks. But in this question, I'll give you the solution. So basically, when we talk about number one, brigadier. So, brigadier in army is equivalent to air commodore. In air force, that is correct, but it is equivalent to captain in the navy, not commander in the navy. So, the entry number one is wrong for brigadier, air commodore, and commander. Number two, for major general, person ranked major general in army is equivalent to air chief marshal, and not air vice marshal in air force. And it's not equivalent to vice admiral, it is equivalent to admiral rank. So 2 is also wrong. 3, which is major, is equivalent to squadron leader in air force, and which is equivalent to lieutenant commander in navy. It is correct. So number 3 is correct, and number 4, lieutenant colonel in army is equivalent to wing commander in air force, and it is equivalent to commander in navy. So 4 is also wrong. So 3 is correct. So answer is option number D, which is D for Delhi. 3 only is the right answer. Now moving to question number 40. Now question number 40 is basically about the Northeastern Council. The Northeastern Council was established by the Northeastern Council Act 1971, and subsequent to the amendment of NEC Act in 2002, the council comprises which of the following members? Which of the following members? So number one, governor of the constituent state. This is correct. Number two, the council comprises of the governor of the constituent state. Number two, chief minister of the constituent state. That is also correct. Number three members to be nominated by the president of India. So that is also correct. And number 4 is wrong. So the home minister of India does not comprise, is not a member of the Northeastern Council. So just for your knowledge, so answer is 1, 2, and 3, which is option A, right? Option A is the right answer. So just for your knowledge, Northeastern Council Act 1971 was amended in the year 2022, and it amended section 3 of the Principal Act of 1971, right? So the 2002 amendment, the Northeastern Council was amended in 2012 again, and section 3 was also amended, which added the fact that there shall be a council to be called the Northeastern Council, which shall consist of the following members, which are governor, chief minister, and 3 members to be nominated by president of India, and home minister of India is not part of the council as a member. So answer to 40 is option A, 1, 2, and 3 only. Now coming to next question, 41. So this question is basically from Indian economy, and from Indian economy there were around 14 questions this time, so we'll discuss them one by one. So consider the following statements in respect of the digital rupee. So digital rupee, so number one statement, it is a sovereign currency issued by the Reserve Bank of India in alignment with its monetary policy. So this is absolutely correct. So this is 43. This is 43. So 43. So definitely digital rupee, which is part of central bank digital currency. 43. So question we are discussing. So central bank digital currency. And so central bank digital currency is a method of cashless economy, for promoting cashless economy in the Indian economy. So definitely the option number one is correct. So sovereign currency issued by Reserve Bank of India. Number two, it appears as a liability on the RBI's balance sheet. Okay, so it appears as a liability on RBI's balance sheet. Number three, it is insured against inflation by its very design, by its very design. And number four, it is freely convertible against commercial bank money and cash. So question number 43, number one statement, as I told you, is correct, because CBDC, which is central bank digital currency, was introduced by RBI Act 1934, and it was based on Subhash Chandra Garg committee. So option one is correct. Number two, just like so it appears as a liability on the RBI's balance sheet. So option two is also correct. Definitely, it's a liability, because once RBI issues a digital currency, definitely it is not an asset, because it is a spending from RBI. Number three, it is insured against inflation by its very design. No, the RBI does not insure digital currency by its very design, so it is at risk against inflation as well. Okay, so number three is wrong. Number four, it is freely convertible against commercial bank money and cash. So this is correct. So it can be converted into deposits and cash easily. So definitely CBDC number four statement is correct. So except number three statement, 1, 2 are and 4 are correct. So the correct answer to this is option D for Delhi. D for Delhi. Now, I discussed 43. So there's one more question, which two more questions which you have to discuss before. So we'll just have a look at that. Yes. So question number 41. So question number 41 is basically about statement 1 and assertion, right? So statement 1, if the United States of America were to default on its debt, holders of US Treasury bonds will not be able to exercise their claims to receive payment. Statement 2, the USA government debt is not backed by any hard assets but only by the faith of the government. So we have to see whether statement 1 and 2 are correct, and even if they are correct or wrong, how they are linked to each other. So statement 1, if the United States of America were to default on its debt, holders of US Treasury will not be able to, Treasury bonds will not be able to exercise their claims to receive payment. This is absolutely correct, because the in USA, the government debt is not backed by any hard assets, but it is the faith of the government which determines the future. So when the government issues bonds to borrow money, people lend their money based upon the faith of the government, and the faith is that the government would repay the money. So it is backed up by sovereign promise by the government, and hence the bonds are not backed by any hard assets. So definitely what it shows is that statement 2 is not only correct, but it is also supporting statement 1. So the bondholders are entitled under a law to sue the government to receive their payment. However, in this case, the government's assets cannot be sold by the treasury bondholders, and hence the fact which matters is the faith of the government. So hence statement 2 is correct, and statement 2 aptly supports statement 1. Okay. So the answer is A. Both statement 1 and 2 are correct, and statement 2 very well explains statement 1. Okay. Now moving to question number 42, syndicated lending. Statement 1, syndicated lending spreads the risk of borrower default across multiple lenders. So definitely risk of default by the borrower is spread across multiple lenders. So what is syndicated lending? It is the lending in which multiple lenders are involved in lending money to either a corporate or a big business individual. And so syndicated lending, what it does is, since multiple lenders are involved, it is headed by a single bank, and since multiple lenders are involved, the risk is spread and distributed between and among the lenders, right? So definitely statement 1 is correct. Statement 2, the syndicated loan can be a fixed amount sum of funds but cannot be a credit line. This is wrong. So syndicated in syndicated loan, the amount of sum of funds it can be a sum of funds, and at the same time it can be a line of credit as well. Okay, so statement 2 is wrong. So statement 1 is correct, statement 2 is wrong. Answer is option C, where statement 1 is correct and 2 is incorrect. Okay, now moving to another question from Indian economy, question number 49. Okay, so question number 49 on your screen, you can see on the right hand side of this page. Okay, so consider the following statements. India is a member of International Grains Council. A country, number two, a country needs to be a member of the International Grains Council for exporting or importing rice and wheat. Okay, so definitely number one statement is correct. India is a member of International Grains Council, but statement two is wrong. That a country need not be a member for exporting or importing rice and wheat. So just for your information, International Grains Council was established in 1949, and International Grains Council is responsible for regulation of export and import and agricultural trade. So agricultural trade is very crucial, especially agricultural trade between developed and developing countries is very crucial, because sometimes some countries export an agricultural produce in a developed or developing or underdeveloped country just to distort the economy. So WTO has been very active in the last 20 years in this, and International Grains Council is also playing a role. So basically, for example, whenever rice and wheat are imported into India from a developed country and the prices are very reasonable, so this kind of import is not allowed in a developing country like India, because this can distort the economy. It can increase competition with respect to our domestic farmers, no, and their produce becomes incompetitive, because people will certainly prefer a cheap rice and wheat from a developed world. So that's why such kind of agricultural produce is not allowed to be imported in India. But when we talk about International Grains Council, it is functioning since 1949. So it was named as International Wheat Council, but in 1995 it was basically renamed to International Grains Council. So the question is not very tricky; it's very straightforward. So India is definitely a member, but number two, we don't require to be a member for exporting or importing rice and wheat. So answer is one only. Answer is option A. Okay, option A. Now coming to another question on your screen. Question number 52. In India, statement 1, non-banking financial companies can access the liquidity adjustment facility window of the Reserve Bank of India. Okay, so this statement is wrong. Okay, non-banking financial companies cannot access the liquidity adjustment facility. So basically, liquidity adjustment facility is a facility extended by RBI to only scheduled commercial banks and primary dealers to avail liquidity in case of requirement, or parking access funds with RBI in case of excess liquidity, on an overnight basis against a collateral. Okay, and basically liquidity adjustment facility enables liquidity management on a day-to-day basis. So this facility is only available to scheduled commercial banks and primary dealers. And how LF works is, the repurchase agreements have to be bought, which are based on repo rate and reverse repo rate. So repo rate is basically the interest rate with which RBI is lending to commercial banks in India, and reverse repo rate is the reverse. Basically, it is the RBI's requirement and the interest at which commercial banks are lending to RBI, right? So that's why non-banking financial companies are not allowed to access the LAF or the liquidity adjustment facility window. Okay, so number two, in India, foreign institutional investors can hold the government securities. So this is correct. So definitely Indian institutional investors, foreign institutional investors can hold the government securities. Number three, in India, stock exchanges can offer separate trading platform for debt. So this is also correct. So let me give you some information on this. So basically, when we talk about FIIs, number two statement, FIIs are allowed, but within the quantitative limits prescribed from time to time, by SEBI, the Securities and Exchange Board of India. And when we talk about stock exchanges offering trading platform for debts, so for your information, NSE first launched debt trading platform recently in May 2023, and how it works is, they adjust this debt trading through SLR and CRR. So basically, SLR is statutory liquidity ratio and CRR is cash reserve ratio. So these are basically currently at 18% and 4.5% in India. So through adjustment of SLR and CRR. So statutory liquidity ratio is very, very easy to understand, and you have read also, it's a basic economic concept. So it is a cash, gold, or any kind of government securities which a bank needs to compulsorily hold with itself if it needs to be eligible for lending in India and abroad. And CRR, cash reserve ratio, is basically the percentage of cash deposits which a bank should park with RBI, so that on during emergency the RBI can help the troubled bank, right? So by adjustment of SLR and CRR, stock exchange are offering trading platform, and stock exchange in this case is National Stock Exchange based in Mumbai. Okay, so it's a suitable platform for corporate bonds, and also the retail investors, they can also experience transparent exchange in NSE. Okay, so retail investors are individual investors who have invested up to 2 lakhs in the stock market, right? So answer to question number 52 is 2 and 3, and which is option D on your screen. So one is incorrect. Now moving to another question on your screen, question number 53. On the right hand side of your screen, in India, which of the following can trade in corporate bonds and government securities? So first of all, corporate bonds. What are corporate bonds? So they are basically commercial papers. A commercial paper is valid for 1 year, but corporate bonds are valid for more than 1 year. So it's a long-term investment process or long-term fundraising process which corporates have for raising investment from multiple entities. So government securities, similar to corporate bond, it is a way of raising funds from the government side. So insurance companies in India, as well as pension funds in India, and the retail investors in India, they all can trade in corporate bonds and securities. So Reserve Bank of India has announced the launch of a mobile app also for retail investors, and this allows the investors to invest in different types of government securities. For example, state bonds, government bonds, and under the retail direct scheme, RBI has given the allowance to retail investors to directly trade in government securities in both primary and secondary markets. So hence, all three are correct. D is the right answer. D for Delhi. Right. Now coming to another question, 54. 54. The question is, consider the following: exchange traded funds, number one, motor vehicles and currency swap. So which of the following are considered financial instruments? So answer is 1 and 3 only, which is option D, D for Delhi. And motor vehicles are not. It's a very lame way of saying motor vehicles here, but motor vehicles are not a financial instrument. It's an instrument in which we sit and move from one place to another, right? So an ETF. So for your information, exchange traded funds are it's a marketable security that tracks an index or a commodity or a bond or a basket of assets like an index fund. And currency swaps are important financial instruments used by banks, investors and multinational corporations. So in a currency swap, the parties agree in advance whether or not they will exchange the principal amounts of the two currencies at the beginning of the transaction. Okay, so answer is very straightforward. There are two financial instruments here, one ETF and two is currency swap. So D for Delhi, 1 and 3 only is the right answer. Now moving to another question, next page, question number 55 on your screen. You can see on left hand side, so with reference to the sectors of Indian economy, consider the following pairs. So economic activity, storage of agricultural produce. Secondary, this is wrong. So primary, it is part of primary sector. So any kind of agricultural activity along with mineral exploration, which is also called mining, is part of primary sector, wherein there is a production of raw material, and when this raw material is fed into a manufacturing industry or a food processing industry, it becomes the secondary sector. So dairy farm, again a primary sector, this is also correct. So this is basically extraction of milk and other products and then converted to allied products like butter, cheese and other products which are basically a part of FMCG sector. Number 3, mineral exploration, tertiary. This is wrong. Tertiary sector is not mineral exploration. Tertiary sector is rather services and hospitality sector in India. And number 4, weaving cloth is definitely a part of manufacturing. It is converting raw material into a different types of clothing. So definitely it is part of secondary. So right. So your 1 is wrong. Number 3 is also wrong. So 2 and 4 are correct. So answer is option B. Only two pairs are correct in the concerned question, right? So we'll move to another question here. Number 56 on your screen. So consider following materials: agricultural residues, corn, grain, wastewater. I'm so sorry. Question 56 we have already discussed in the geography section. So coming to question 57. So with reference to, on your right, with reference to physical capital in Indian economy, consider the following pairs. So number 1, farmer's plow, working capital. Number 2, computer, fixed capital. Number 3, yarn used by the weaver, fixed capital, and petrol, working capital. Okay. So just understand, farmer's plow is not part of working capital. Farmer's plow is part of fixed capital. So fixed capital is basically referring to investment in long-term assets. So definitely for a farmer, using a plow and buying a plow is a long-term investment, because without that the farmer cannot plow the agricultural field. So basically fixed capital involves allocation of a firm, a company's capital to different projects or assets with long-term ideas, long-term implications for the business. So these decisions which are related to fixed capital are basically called investment decisions or capital budgeting decisions, which affect future growth and profitability and also the risk of the business in the long term. And these long-term assets are basically lasting for more than 1 year. So farmer's plow definitely a fixed asset, and investment in these assets includes acquisition of equipments, modernization of equipments, and also upon the breakage, there is a replacement of equipments also. So fixed capital decisions basically are about land, building, plants, and machinery, right? And when we talk about computer, definitely it's a fixed capital. So computers are required by corporations, and computers last for more than 1 year, definitely part of fixed capital, right? So yarn used by the weaver, fixed capital. So this is wrong. Yarn is not a fixed capital. It's a part of working capital, because continuous availability of yarn is very crucial for weaving, right? And number 4, petrol, again it's a working capital. It's correct, because petrol is required for day-to-day operations. So what is working capital? So apart from the investment in fixed assets, every business requires to invest in current assets. So this investment facilitates smooth day-to-day operations of the company or the business. So definitely any activity which is part of day-to-day business requirement is working capital, and any activity which is part of long-term planning is part of fixed capital. So here answer is very simple. 2 and 4 are the correct answers. So 2 and 4. So only 2 pairs are correctly matched. So option B for Delhi is the correct answer. Now moving to another question. And so this question I'll just cover up from science and tech, because in the last discussion we missed it. So it's a very simple question. Which one of the following words or phrases, 58, is most appropriately used to denote an interoperable network of 3D virtual worlds that can be accessed simultaneously by millions of users, who can exert property rights over virtual items? So answer is very straightforward. So the marking here on the paper is wrong. So it is basically metaverse. Our answer is C, metaverse. So what is metaverse? It is a virtual environment in which individuals become avatars, and these avatars interact with each other, and they perform various kinds of activities. And So it's a 3D virtual world, and it is accessed simultaneously by millions of users, and it is the advanced form of AI. So if you have noticed, in the last 3 years, one movie was released in Hollywood named Ready Player One. It was directed by Steven Spielberg, and in which the dominance of gaming in the future has been emphasized, in which avatars not only play the game for fun, but it is actually a major economic contributor also, because through the games the people are actually earning money. So definitely a big future scenario, and in the future metaverse is going to take over, but how it shapes up will depend on how we adhere and adjust to the virtual environment. Okay, so answer is metaverse. Now moving to another question on your screen is question number 59. So, with reference to the rules imposed by the government, Reserve Bank of India, while treating foreign banks, consider the following statements. Number one, so there is no minimum capital requirement for wholly owned banking subsidiaries in India. So, this is a wrong statement. There is actually 10%. There's actually a 10% of the risk-weighted assets, which is required for capital requirement if a foreign bank has to establish itself in India, and the wholly owned subsidiaries, shall be required to maintain minimum capital ratio of 10% of the risk-weighted assets. So risk-weighted assets are basically that kind of assets which are weighed with respect to the current deposits in the bank, and weighed against the risky liabilities which the bank has, or the risky lending which the bank has undertaken. So 10% of risky weighted assets is what is required by any subsidiary of foreign bank which is wanting to establish in India as a subsidiary. Now, number two, for wholly owned banking subsidiaries in India, at least 50% of the board members should be Indian nationals. So, in order to ensure that the board of directors set up in India act best for the local institutions and local people, so RBI what it has mandated is not less than 50% of the directors should be Indian nationals. So, statement two is correct, and statement one is wrong. So answer is two only. Answer is option B. B for Bombay. Option B. Coming to 60 question. With reference to corporate social responsibility rules in India, consider the following statements. So CSR rules specify that expenditures that benefit the company directly or its employees will not be considered as CSR activities. So this is correct. Because CSR activities, corporate social responsibility, it is towards welfare of society, and some social issues are undertaken by the said company. So CSR rules specify that expenditures which are not providing profit to the company, so those kind of activities should not be undertaken. So it is basically targeted towards social welfare. So number two is CSR rules do not specify minimum spending on CSR activities. So this is wrong. So CSR rules, according to Companies Act of 2013, which was amendment, section 135 of the Companies Act 2013 talks about CSR. So the clause 5 of section 135 is basically prescribing minimum spending obligations for the company. So the section 135 clause 5 ensures that the company spends in every financial year at least 2% of the average net profit of the company made during the 3 immediately preceding financial years. So the average profit of the last 3 financial years, and that amount aggregated, and 2% of that aggregated amount has to be spent in CSR activities. Okay. So number two is wrong, and number one is correct. So answer is one only. Answer is option A. Okay, option A. Now coming to another question on your screen. So question number 70. Okay, so 70. So the questions which we have discussed already here in science and tech, as well as geography and environment. So question number 70, very straightforward. So you can see at the bottom of your screen. So with reference to the Indian economy, collateral borrowing and lending obligations are instruments of A, bond market, B, forex market, C, money market, D, stock market. So bond market is all about raising finances or funds by either corporates or the government. So collateral borrowing is not associated with bond market, because bond market does not entail mortgages, so we don't have to keep a mortgage of the property to get finances. In forex market, it is all about foreign exchange transactions and the trading in that. D for Delhi stock market is all about share market and investing in shares of different companies. But yes, collateral borrowing and lending, it is an instrument of money market in which a mortgage is kept by the borrower, and in exchange of the mortgage, a collateral based loan is approved. So definitely it is a way of raising a loan in the money market. So answer is C, for question number 70. So that will be all. So I hope again we have given some clarity on economic issues as well as some international topic and miscellaneous topics. So with this, we'll be winding up the GS paper 1 solutions. So all the topics have been covered till now, and thanks for watching, and we'll see you in another video very soon. Thank you.